All right, so what we're discussing now is your annual financial statements. Sorry, just check this. There we go. Your annual financial statements. And why we're discussing it now is because for most companies, your tax year is ending now at the end of February. So there's two events that are happening. One is RP6. So this is when someone wants their tax, end of Feb. And then you generally start drafting your annual financial statements. And that will then be an indication for you in terms of how well you've done or where your business is going, and will then be your final calculation for income tax, which you'll submit in January next year only. Okay, so a year from now. This is kind of it. A lot of the stuff you guys would have heard. So you're going to have to just accept that. And the reason why you hear it multiple times is these things are very, very important in terms of the actual company. Yeah, we would know about me or been through that process. Okay, so your annual financial statements. A lot of people think, why are we doing it? For a lot of entrepreneurs, they only see this thing once a year. They only see their numbers once a year. And they see it in the form of the annual financial statements. So it's normally at 12 months, right? So it'll be for the financial year in which you're operating. So depending on what your financial year, most SMEs in SA, or most companies in SA, March until February. That's the year that they're operating, the tax year. A lot of the larger corporates that are on the actual JSE, it's sort of June, end of June-ish, they sort of midway in the year. So that's when they'll drop this. But for us, that's it here. So it's your actual financial year. When you're starting up a company, so those 5 people who run the free company, if you start midway through the year, you can have annual financial statements for 18 months. So I start September of last year, I registered a company. I only have to prepare annual financial statements end of February next year. Okay, so you can have up to an 18-month time frame. Okay, those are the basics around it, what it is. So as I was saying earlier, too few SMEs only ever see the actual numbers when this happens. And too few SMEs only ever get their financials done when they're seeking finance or a tender application or something like that. So they generally have very little insight into their books. And if you're only looking at it for the first time now, you're already a year late. These numbers are a year old. Yeah. So what we want to just discuss is the importance of these things and what you need to be doing on a monthly basis, what your actual person is doing your books. If you don't have books from an accountant every month, you can still do it on Excel spreadsheet. Simple stuff we can show you. Okay. Okay, so that's obviously the objective. So generally the board will use the annual financial statement. So yourself as the director or the shareholder of the company, you would use it to plan your business, where you're going, what it's been doing, and things like that. So it helps you think about the expenses of the past and helps you plan the actual future. So that's the key that you want to be doing it. If you're only doing it once a year, I mean, obviously annual financial statement is annually, but you can actually prepare this monthly. And that's the key. If you can get these numbers monthly, you can make calls immediately instead of finding out after the fact. Okay. So it tracks everything, your revenue, your expenses, what assets you've purchased, what assets you need, your staff, your salaries, taxation. So all of that stuff sits on your annual financial statements. Okay. So it really is a document that it should be your best friend. It should be closer to you than your wife or your husband or your girlfriend or your boyfriend. That's something you talk to every day. It's like important. Yeah. So that's what we said. So these are the highlights of what it's about. So making choices. We're arriving now we're in the middle of Feb. We start to prepare annual financial statements for our clients during sort of April, when we start drafting. So because you'll always be doing the bookkeeping a month after, so February has to get finished first, we'll get the books in March, we prepare the books, and in April you start drafting the annual financial statements. But already in each month when your bookkeeper is doing your stuff, this is what you're using it for, to make choices. So like now, we're at the end of the sort of approaching the end of the tax year. If you're already looking at your books now, and you have been every month for the last 11 months, you can already start making plans like, oh, I've been buying something from so-and-so for X amount. Let me start shopping around in the new year now, the new tax year. Maybe I can buy that software cheaper, or I can get those bricks cheaper, or, you know, I've been targeting these clients and look at where I've actually been receiving my work. So maybe all the money I've been spending on advertising online onto Google doesn't work. Maybe I should put advertising on my vehicle or you know, on my clothing, have a branding on my clothing or something. That'll give, because you're able to see it now, the last year that's actually taken place, the things that have made a difference in your actual company. And that's what you'll be looking for. That's when you start making, you know, the different plans about your business. So that's crucial. You don't want to leave it until the end of the year. And that's why we, as you've seen over the course of this year that we've been speaking about this, we look at the monthly bookkeeping every month. If you don't have an accountant, you don't necessarily have to stress about it. A simple piece of paper, what your sales are, what you've, sort of your cost of sales. So if you, like, I use the example the last time I was here, I go to Checkers, I buy flour, and then I self-cook at the taxi rank. Very, very simple example. Going to Checkers and buying the flour and the oil and stuff on my cost of sales. So that gives you, you can just track those, and then what are my expenses? Transport, cell phone, you know, things like that. So very quickly on just a piece of paper, you can track what you're doing in terms of revenue, cost of sales, expenses. And that already will give you an idea in terms of how to make your decisions on a monthly basis. It doesn't have to be fancy software, although there is free accounting software online, which does operate on cell phones. So if you want to go through the headache of putting it through, you know, and yourself learning the software, that's fine. But Excel, a simple piece of paper, does the same thing. That same information, along with your bank statement, is what an accountant would use to draft your annual financial statement. So it doesn't even have to come from like an actual an accounting platform. Okay. All right. But the trick is you must be seeing the numbers so you can make the choices. Yeah. Then obviously investors. If we're looking for investors, we want someone to invest in our business. This doesn't necessarily mean, it can also be loans, I suppose, for the banks, but investors, like we said, doesn't have to be some venture capital fund with the fancy money. It can be your uncle who's seen what you're doing in your business and goes, yeah, I'm happy to throw in 10 grand, 100 grand, $1 million, that type of thing. So you can show them on a piece of paper what the business is doing. You know, very, very easy. And it doesn't have to be, it doesn't have to be complicated. At the level that we're playing at, in any sort of SME under about 10 million rand, it can be very, very simple. Yeah. Obviously for finances, we know the chances of getting money at a bank is like non-existent. We could rob the bank and we'll get more money than we would if we applied for a loan. I'm not an advocate if anyone robs the bank. Don't do that. That's a bad idea. But yeah, the thing is, when someone wants to take out a loan, banks are becoming more sort of open to it. We've seen now with SONA, there's going to be incentives. We don't know what they are yet. The President's announced incentives around the state of and disaster. They're going to help 90,000 SMEs. How that's going to filter down, no one yet knows. We would have thought the plan would have been in place before the announcement, which would have made all of us feel a lot happier, I'm sure. but they're also going to require financials, share certificates, BE certificate. So I don't know if you guys remember during the actual COVID-19 lockdown, where they started to give out incentives to SMEs. That's how we started this actual talk and these adopt SME programs, because the things they asked yourselves to give them to get the grants and stuff, you didn't have. You didn't have financials, you didn't have your registration, you never had your BE certificate, those type of things. So let's hope this time they've learned from that and have made the hurdle rate, easier to access the actual financing. Okay, so that's why you've also got to do annual financial statements. So the loan could be a grant. Remember I said, we've spoken, the only free money we get is EESD. If you can get into a enterprise and development program, that'll be a good grant. That money they actually hand over to you isn't a loan, it's cash you can use, and they're not expecting you to actually pay it back. But they want to see that your business is going to be, sustainable. We've just finished a program with a client up the road here, and they helping 3 small SMEs. They bought them a vehicle, they've paid for a year's worth of their rental, and that's all as a grant. They got over a bar each that set them up to get going, but they needed for financials. Okay. And then obviously, stars, they'll be fun escaping. They want to see if you owe them money. That's all they're interested in. They don't care if you made a profit, they don't care how your business is doing, they don't care if you owe anyone any money. They just want to check that you don't owe them any money. That's all they're interested in. So you have to submit that. And even if your taxes are nil, you still have to submit it to show them it's nil. Okay. So that's where that's kind of the reasons around that. Yeah. Just check online quickly. Okay, cool. So this is the information. So you touch on it now already. So this is what an accountant would use. And even yourself, if you're starting to just keep records on an Excel document or on a piece of paper, this is what you're looking for. So like we have like your bank statements. So you know what the year started at when your bank, you know what the year ends at. Because that'll track the movement. Your debtors, important, I think you guys have heard this so many times. The 3 things every entrepreneur knows. Who owes me money? Who do I owe money to? And how much is in the bank? Those are those things. How much is in the bank? Who owes me money? And who do I owe money to? That's it. That's your books. So when people are drafting, when your accountant is drafting your financials, it's important to look at these things. And they have various like actual implications. Obviously, if people owe you money, it's an asset in your business. But if they've been owing you money for 3 years, the chances of you getting it back are pretty slim. So you want to write those things off. That has an impact. So if you're VAT registered, for example, and you write off debt, you pay less VAT on your next VAT cycle. You see, so it also brings down your sales, which brings down your actual tax in your company. So your actual profit might actually get smaller. See, that's why it's important, because if you just leave it there, and I'll tell you now, your accountant will never ask. And I can speak from experience, accountants are lazy. They'll only do what you tell them. They won't do what's in your best interest. When you ask them later and you say, oh, but I could have done this, they think, yeah, no, you could have. Why didn't you tell me? You didn't ask me. I didn't tell you. So, and I can say that because we see it all the time. A lot of the clients we sign, that's been exactly the problem. They've overpaid tax. They've haven't structured their company properly because you don't know, and you only know the things you know. So that's why we do this talk. So when whoever's going to help you to do your books and do your own financial statements, you now know what to ask them. Now, of course, the last thing is your assets. So that's obviously important as well. It's almost a free write-off against your tax. So a lot of people don't realize I might be sitting with the big asset and you're not actually writing it off. So that's like a depreciation that you get every year against your assets, you record it as an expense on your income statement. Although it's not money you physically pay out of your company, it's shown as an expense, which lowers your profit, lowers your tax. So if you've got anything, and I know a lot of us, like SMEs, when we start out, we already have stuff. I already have a bakkie, I already have tools, I already have a computer. You don't bring those things in. So now the assets are not in there to write off and lower your taxes. So go look around and think, what have you not, that you use in your company that you have not brought into your books? That has a massive impact on your tax. Okay, something definitely to think about. You write those things off slowly, maybe you don't actually like even have to pay tax. Okay. That's key. So if someone drafts your financials, check these things. If they've used your proper SME registered name. That's important because remember, your annual financial statements now become a legal document. You sign them off as the board, they get handed to banks, they get handed to SARS for taxation. Things like, depending on the scale of your company, there's outside shareholders who are like having to base their investment case around them. So proper legal name, SME, plus the registration number. If you're a sole prop, your full name, so your full name as it appears in your ID book, trading as whatever it is, and with your ID number. That's like the company registration number to give you a guide. So that's important. So when someone looks at that, they know who they're holding accountable if the stuff is not true. Okay. When does the year end? So not everyone has a February year end. It could be July, could be November, could be anywhere. So just check these small things, because too often accountants make an assumption. I know my teammates are getting bashed here. Sorry, guys, but we know this is the truth. They make an assumption because when you register a company at SIPC, the default is February, because the income tax year with SARS is February. So that's why the default is just February. And they assume that it's that. And we pick it up all the time. It's June or July or end of the year, and December. So check that. Okay. And then check that they've got all the directors on there. Because these are the people who have to sign it off to say that these numbers are real. Okay. And then who the accounting officer is. And the accounting officer should generally be registered at an accounting body. Okay, so it'll be Urba, Psycha, there's so many of these accounting bodies, but there must have an accounting number. Okay, so just make sure that they are registered accountants. Otherwise, these things mean nothing. And that also they know to do the right things. Yeah, so we just go through this, do the assets exist? So make sure they've recorded the right information. Because you know what you owe, you know what your invoices were, you know who you owe money to, you know who owes you money. A lot of that stuff might not be showing up, especially if you're just doing invoices, not in an accounting platform. It might just be doing invoices from an invoice book. So someone won't know there's people who owe you money. You'll know because you know exactly who owes you money, and you know who you owe money to. So unless you're getting invoices tracking it, the actual accountant won't know. Yeah. Okay. Questions on that before we go to tax? We've discussed this tax thing a lot of times, and it's important. I'm going to go through it again. Questions on drafting your annual financial statements? Yeah. Okay, cool. I like when I do this, then everyone understands it clearly. Like we've got this sorted. All right. We're going to touch on small business corporation. We've done this a few times this year. And the reason we do this is your accountant messes this up every time. So accountants are trained. There we go.
I need to ask, if you take donations, how should you operate this section?
Okay, so the guys online, the question is if you receive donations, and I'm going to assume grants as well, because grants are something to be accounted for. So in your books, under other income, would be anything like a grants, a donation, things like that. So that generally that income doesn't get taxed. And then the assets you purchase with that income or the expenses you pay with that income are not included in your books. They're on your asset list, but we don't write off the asset in terms of a normal life and depreciation because you didn't earn the income, so you can't actually get the depreciation or the benefit from it because you're not actually taxed on it. So that is very, very key if you do that. So if you do get a donation or a grant, make sure they're recorded properly. We've had occasions where like other accountants have actually treated it as income, and then the poor SME had to pay tax, and that's just like offsides. Luckily, you can go back 5 years and fix those things. So if you're now doing your annual financial statements now with this type of information that we've just spoken about, you can go back 5 years. So if you look at them and realize your previous accountant has messed it up, have it fixed, go back 5 years, file the returns, maybe even get money back from SARS. Yeah. Anything else on it? Okay, so small business corporations tax. We've touched on this a lot, and we do it because accountants are trained to actually work at large corporations or to work at large and accounting firms. They're not trained to help small and medium enterprises. So although the Tax Act covers small business corporations, they generally, the Viewed Varsity, the lecturers like, oh yeah, these sections, yeah, just read them in your own time. You know, they generally don't get exams on them and stuff like that. So it's not something they think about. It's not the first off, when they're doing it. They're not thinking about, hold on, there is another type of taxation. Okay, it's just standard straight line. That's it. All right. Okay, so to become a small business corporation, these are the things you need to be looking at. Okay. Your gross income, less than 20 bob. Okay. I know for a lot of us, we're thinking, oh, that's not a small business, that's a big business. But 50 million rand is normally small. That's what you're going to say. 50 to 200 is sort of medium. Anything above 200 is large. Okay. So SARS has dropped it at that because it's really micro enterprise. It's micro actual enterprise level. So it gives us a lot of room to grow. If we all had companies with that sort of turnover, life is pretty good. So you can see there's enough actual runway. It's not like 1 million or 2 million. That almost just actually pays your car. So you want to be making real cash. So SARS has opened that up. Okay. You can't do personal services. Personal services will be an accountant, a lawyer, an architect, anywhere where the owner physically does the service. That's my skill. I'm an accountant. If I was trading on my own, I can't be a small business corporation. Okay, if I'm an architect, I can't be. With that said, if I employ 3 individuals involved in the company that are also now servicing those clients, so I have an article clerk, I've got someone handling sub-C, doing registration and stuff like that, providing they're not family. My brother, my sister, my mother, someone, three individuals in the business that are not family. I now am a small business corporation. Okay, so that gives you scope now and for growth. The reason why they don't want family is they don't want you to split the company up. So you might be a much larger company and you can start to split it up. All the owners have to be people. So it must be a real person. There is again, there's always loopholes. It can be a trust. You can have a trust, providing the beneficiaries of a trust are actually people. So it might be like KZN Youth Trust. The youth are individuals. That's a bit of a tax haven though, but that kind of thing. I mean, in the law, as long as the beneficiaries are actual people, then you can have a trust. But you can't have, for example, one actual company owning another company and then being a small business corporation. Okay, so it's got to be for physical individuals. You can't be involved in another company. So I can't have a company turning over 50 million and I split it into three. Another 20 million one, 15 million, 15 million. No, I'm good. No, you've got to own one entity. Yeah, there's always loopholes around that, of course, depending on the type of industry, providing it's not a personal services. You can own a business. Your wife, your husband can own like another part. Maybe your business is in transport, you've got a retail store, and you're doing something that's all under one thing. You can split those into three or two, depending on what the turnover is. You can own one. Your spouse can own one. You're under the threshold, and it meets the personal services thing. Bingo. There you are. Operate. Okay. So there are structures you can do. So gives you that. Not more than 20% of your income can be professional services. So for example, now again, this ties into the personal services. My accounting firm, if more than that amount of the income comes from me personally doing advisory work, that's it, we fall out of it, regardless of how many staff we have and stuff like that. So just look at the type of, how your sales are made up, where you earn your income. Maybe what you do there's always ways around it. So this is the nice thing about understanding tax. You can have a side hustle. So though I own a company, I've got a company, if my advisory work is starting to get a bit high, I can do advisory my personal. Separate from the company, I'll pay tax on it in my personal. Okay, so there are ways around everything. So it's always good to talk to somebody who understands these things. And it's not breaking the law, it's making use of the law. So tax evasion, bad. Tax and avoidance, definitely good. That's what we're after. Tax optimization, that's what you want to be doing. And then, of course, the business must be a registered entity. So you've registered it at SME. You can't be a sole trader. Okay, so you've got to be registered at SME, and then it works. So you can't do CCs anymore, but if you have an existing one, you can keep that. PUR, yeah, stuff like that. Okay, so those are the things. So if you fall in that category, make sure your actual accountant who's doing your books knows that. Because it becomes important now, you'll see in terms of tax. I'll go forward one to show you tax first. If you're a small business, you're going to save at least 95,000 Rand in income tax. So if your turnover is in that 550,000, not your turnover, your actual profit, you made 550,000 in profit, you're only going to pay, you're going to save 95,000. That's what you're going to be paying. So it's important. 100K that employs people, that buys a small car, can expand your business, things like that. So that's the tax bill. So for a lot of people, especially the larger companies, the 95K is it's not really what we'll have that after. It's 100,000, it's fine, I don't care. But the big savings come here. You know, we spoke earlier about your assets. You're finding all those assets that you're using that you never put inside your company. That's the key. That laptop you bought, you might have a server, if you're in the IT game, server, laptop, all those things you write off 100% in the year you bought them, even if you own them only one day. Okay? What the write-off, remember we said earlier, and depreciation is not an expense you pay out your business, but we put it on your income statement as an expense, so it lowers your tax. So to give you an example, I'm in the IT business. I buy a whole lot of servers because I'm hosting people's websites or things like that. I've made now 500,000 in profit, but those actual servers and stuff have cost me a bar. I write off that R1 million. Now I've got a loss of 500,000. There's no income tax. That 500,000 rand profit of the cash proportion, that's mine. I don't owe sales tax on that. And the 500,000 rand loss that's carrying forward into the next year, when you make another 500,000 rand profit next year, there's no tax again. This is the way it counts. So things like now, using the same example, I've got my laptops and the IT infrastructure, which I can write off 100%. I buy a whole bunch of little cars. You know, just 100,000, 95,000, I could probably buy like a Datsun Go or something like that. It's probably in that range. So I buy my tax saving about 5 Datsun Goes, the 500,000 rand I've saved. I can write those off 50, 30, 20. Now already another 250,000 rand in my first year of write-offs. That's where it counts. This is where you get to kick the tax can down the road. So you write those assets. The other legislation, you know, the thought behind it is that the money you not paying SARS is what you're going to probably be using to buy assets and expand your business. You see, expand your business, then you're going to employ more people, more jobs, and eventually you're going to make profit. But you're going to reach that plateau where, you know, you're not going to buy any more assets. You're going to sweat those assets. You don't have to buy cars every year. You don't have to buy IT infrastructure every year. And you're going to plateau off eventually with all the write-offs. And then SARS is going to fetch the actual tax, maybe in 3 years' time, 5 years' time, and things like that. So it's to fund your growth. That's what the plan is, to fund growth. We don't want to be sitting making 200,000, 300,000 like every year. We want to be making 20, 30, 40,000, 40 million rand. So that's what the plan is. Okay, and a lot of people, and with your accountant not understanding the small business tax, you pay SARS the money. See, instead of you keeping the money and using it to expand your business. And that business might be, you might already not want to hire more staff. But what happens when we have more cash? I eat out more, I buy a nicer car, I move into a bigger house, and that's funding somebody else's business. The car dealership makes money, the restaurant makes money. So the more cash we have in our hands, the more the actual economy goes. If it just goes to SARS, we know where it goes. Maybe no one knows where it goes, but we never see it again. Okay, so this is key. Small business tax. Look at it. I mean, even if you're like actual profit, to give an idea, look at if you only made 87,000 rand profit. If you don't show your accountant that you're a small business corporation, you're giving SARS nearly 20 grand. Just simple, just on tax, without the write-offs. So literally a quarter of your money to SARS for what? Because that guy didn't go to school, or that lady didn't think about, you know, small business tax. What could you do with that extra? So that's how they actually break it down, you know, so you can actually see where it is. So crucial. Understand this. Yeah, it's going to make a difference. But even all those assets, even if you're making a loss, you think, "Uncle, I'm not paying tax anyway." Bring the assets in, bring all that stuff in, do the depreciation. Because what's going to happen is for the next 2, 3, 4 years while you're grinding and getting going, that loss is building up, building up, building up. And then when you start making a profit, that loss gets carried forward against any future profit. So it might be years before you pay tax. Okay. And now you've got a loss that you brought forward. And now you can still start writing off assets because you're buying new stuff as you're making money. So this is probably the key thing to understand around your annual financial statements. Yeah. Anything around that? Questions on that? See if there's anything online. Ed, I see someone's hand is up.
Yes, you can go for it. Robert. Roberto. You can type in the chat.
I don't know if you can you hear me now?
Yes, we can.
We can.
Okay, so my question is on the donation, it didn't cover the expense side of it in terms of if let's say the SME they donate I don't know certain money or property or whatever they want to donate, how do you treat it from the expense perspective?
Okay, cool. Thanks. That's actually, that does help a lot. A lot of people just see it from the income side of things. So you can also give cash. It doesn't have to be cash. You can also donate. And you can write off roughly, if you don't have a section 18A, which is like you give to your church or you give to like an NPO that's helping, they'll hand you back a section 18A, which you claim in your personal tax. But if you're a company and you don't give to a section 18A, you can actually, up to about 10,000 rand, you can expense it in your books. So I know a lot of small businesses would say, donate it. And you can donate, you can donate to your family. You can donate, and they put on their books as an expense. There's 10 grand, lowers the taxes. But as a company, if you're giving it to like a church or like an NPO or something like that, they'll give you a section 18A, and you can actually donate up to 10% of your taxable income. So if your taxable income is like 500,000 rand, you can actually donate up to 50,000. If you donate more, whatever you don't claim in this tax year, you can only claim up to the actual 10%. The rest of the money will be claimed for the next initial tax year. Okay, so think about that in terms of how you structure your expenses, who you want to help. A lot of people tithe at church. Get a section 18A from your church. No, it's for real. No, Jesus isn't free. But no, I'm obviously joking about that. But in the sense of that, because you get a tax write-off, you can give more the next time. The same with the tax write-off, and depreciation. Because you're not paying tax, you can give more and do more. Okay, so that's kind of the thinking behind it. Perfect. Anything else? Cool. Guys, thank you so much. This is the end of our year in terms of this series of talks. March, again, we kick off the beginning like we did March last year with the start of this actual series, this Adopt SME series. So March kicks off again with what you should know. It's a big overarching talk about everything, covers the taxes, of course. So you've got it in your head fresh at the start of the year. And it goes forward over the course of the a year, tax year. 12 talks like this. 5 of you have won a chance to be on our Adopt SME program, which starts in March. Okay, the official accounting side of it starts probably after Easter in April. You're going to be part of a group of about 200 SMEs. This is our largest and Adopt SME program that we're actually doing now. So we're looking to help about 200 SMEs. Scattered around SA, all over the country. Tax, accounting, they're part of this talk. Monthly bookkeeping, just like one-on-one chats about their business, online, marketing, things like that. It's intense. Some more of you will probably be invited. We're just waiting because we're raising funds all the time. We do this free, out of our own time, out of our own cash. This year, because we're doing 200, a couple of large corporations have come along on board and they want to fund it, which helps. So some more of you might actually be invited onto the actual program this year. We want to just get the final sort of numbers in and things like that. But 200 will kick off this year. The program's intense. We chase you. We don't wait. We're not accountants. We wait. SARS doesn't wait, so we chase you. The guys who've been on it, who've worked with us, we had one member from the cohort this year who's complained that, oh, you guys chase me all the time. I don't want to be, why am I being harassed? You're being harassed because it's going to help you grow your business. If you're feeling that way, you're obviously not actually taking your business seriously. Okay, so we will chase you for information. We'll push you, we'll test you. Yeah, so, but yeah, for the people who don't get onto the program, this course starts again in March. Okay, so attend, come through. You can still mail us. If you've got a question after the fact, send us a mail. Go, hey, I need help with this. Can you assist? Invariably, we can assist through our franchisees. We can assist by doing it cheaper. Because we have other clients who obviously pay us, our full fees and stuff like that. So give an example, personal tax and return, a normal client will pay us 1,400 Rand. If you need yours done, we can probably do it for like 200 bucks. You know what I'm saying? Because we can just work it in there. So yeah, so don't feel that if you're not on the program, that attending these things is just about watching the screen and sort of gathering knowledge. You can ask us for help. We don't know what that help will be. We don't know what the fees will be, but ask. We can then advise you and help. Okay. Cool. Guys, thank you. We really appreciate it. Enjoy the rest of your day.
Thank you, Taran. Thank you, everybody online.
Thanks, Ed. Enjoy.